Hey everyone, it is Dave Lucas. I hope you guys are doing well today. It is just me solo. Doc is digging out from the ice storm. Um, I didn't get the ice, but I got like 2 feet of snow, so I'll be digging today. For that. Um, and from my standpoint, I've got a few minutes today. I want to run through a few things with you I think that are important, things to note. This is a massive, massive week in the market. So we've got um, Apple, Tesla, Amazon, Microsoft earnings, right? All of that this week. We've got the Fed on Wednesday. It sounds like we may be able to avert a government shutdown as of today. That's one of the reasons the market's jumping the way that it is. So good to see that. Yeah, so we've got all of that. Plus, we had more tariff stuff coming over the weekend that subsided for now, but it doesn't mean it's over, right? So the first thing I want to do, I want to talk a little bit about what's happening in the charts, just so we can take a look at that from my perspective, the way I look at things. And then I've got something cool to share with you, something that you can go find online as well that can give you a little bit of a playbook for on this tariff stuff. So first and foremost, I'm going to look over my screen over here. And, what you can see is we haven't really gone anywhere in a while. I mean, that's really what this is. This is a daily chart, a 1 year daily chart on the market. And we really haven't gone anywhere in a little while. We've been sideways for better part of a couple months almost at this point. And this Bollinger Band's squeezing tighter and tighter. And you can always think of the Bollinger Bands, the tighter they get, it's kind of like when you squeeze your hands and water comes flying out of it, right? At some point, this thing's going to pop out, but you need energy to help it do that. And what do we have? We've got a good amount of energy sitting right here on the daily chart, right? So 52 on the energy is pretty close to fully charged, right? So this thing is still ready to go and it can come flying out either way. And I have to believe with all the risk events and stuff this week, by the end of this week, we're going to have a pretty clear direction on which way this thing goes. We're either headed to new highs or we're going to break down from here. And so right now, give the nod to kind of the new highs, right? Because we're just in that uptrend overall. But we'll see how it plays out. Now, the other thing I like to look at is the weekly chart. So this is the weekly chart, 3 year weekly chart on the S&P. One thing that is absolutely clear for me, always has been on this chart, this moving average is the 20 period moving average. Same that was on the daily chart too. This 20 period moving average, when you're above it, you're an uptrend, you're continuing on. You can test it, right? You can test it. That's just fine. But as long as you stay above it, you have a good solid uptrend attack. The minute you break down below it and you can't come back and hold it, guess what? You are in trouble. It's going off the rails. And so, like, here's a good example of where we broke down below it, but held it, right? And then kept going. That's a good example. So we can test it, we can do that. But if we break down below and we don't recapture really quick, typically that means you are changing polarity of a market. You are changing character and you're going the other way. And you use this as a good signal, right? So what we've got is this chart, kind of grinding higher here, holding the line, right? But now charging itself back up. This is all sideways action for the last few weeks. So what has that done? We started to back here, we started to release higher, bet, walk sideways. Now we're charged back up. So we've got a extremely charged chart. Doc and I were talking about this the other day. Could it be that we just have a sideways year for once? And looking back in time, right? There's been a few times where we've kind of had sideways years, 2014 to 2015. We didn't, not, no major moves, no major things. We just didn't really go anywhere. We stayed in a tight range, across the whole year, right? And so this is maybe we see something like this. You can tell though, how, the change that's happened over time. Look at this kind of market like this, and then bam, this is when we started the money printing cycle and we started QE and we started, all of that stuff. And it's just nonstop since then. So to change from this character to something like this and then really just not do anything for a while, I find it hard, but it's possible. I guess it's possible. It has happened before. So really to sum up kind of where things are at, we are still in a nice uptrend. things are looking, really good. We're holding the 20-period moving average on the weekly chart just fine. We've got a charged up weekly chart again. We've got a daily chart up with a ton of energy still kind of ready to go. I think by the end of this week, with the things that we've got out from risk events, that markets will pick a direction and we'll be either off to the races higher, or we'll break down from there and have our first real correction of 2026. So that's kind of the state of the state, if you will. Now, I do want to share something, as I mentioned. Let me find that. I'll share. Where are you? Tab. There we go. So hat tip to the Kobasi letter. If you don't follow these guys on Twitter, you should. But hat tip to these guys because they have created a playbook for Trump's tariffs. And it is playing out to a T, sometimes much faster than what the playbook says. In fact, over the weekend, we got through like steps 1 through 8 with Canada. But usually what happens is towards the end of the week, like on Friday, Trump posts a cryptic message signaling tariffs on a specific country or sector. And then later that day, President Trump announces a new large tariff, right? Over the weekend, it was 100% tariffs on Canada. Saturday or Sunday, Trump doubles down. So if you saw what Trump was doing over the weekend, he kept hammering posts about Canada and a deal with China and how bad that is and everything else, right? Over the weekend, the countries targeted by the new tariffs typically respond publicly or signal a willingness to negotiate. On Sunday evening at 6 p.m. when futures open, typically stock market futures drop. They did last night, but shortly after that, right? Monday, Tuesday, President Trump continues applying pressure. He didn't have to apply pressure last night before market open, because what happened was the step 8 came into play. Step 8 and 9, really. Trump didn't have to post discussions were underway. The Prime Minister of Canada came out and said, we're not going to do that deal with China, right? And so, like, we got through all the steps in just a few days, but Sunday evening of the weekend, futures open higher, and so on. Monday open over the next 2 to 4 weeks. Various members of the Trump administration continue to tease progress, trade deals announced, and so on. Repeat step 1. This is something that you should bookmark and go find. It's the you want to follow the Kobasi letter, right? Right there. That's who you want to follow on Twitter. You can go get this and bookmark it. But every time Trump does this, it follows this pattern. It followed it almost to a T with the Greenland thing. So make sure and check that out, because it's I think something that you should have just, as these things go, because he's going to use tariffs as that blunt instrument whenever he needs to. And you need to be ready for that and what it does with markets. So that is that. I'll jump back over to the charts on a couple things, and then I got to get going because I got to start getting us dug out here. So let me share charts again. There it is. All right. So the only other thing I want to talk about here is gold. This thing has gone absolutely parabolic over the last few days with all of this. And weekly charts getting exhausted and stuff. I would be on the lookout, guys. I would be on the lookout for a decent pullback in gold. We saw something like that back here, right? We pulled back from like 405 all the way to like 360 or so. I would look for one of those moves again. Like, so 463 down to like 425 right here in this breakout. That will be a great place to either sell into, maybe an entry point, that sort of thing, if you want to jump in on gold. So this thing has gone just absolutely crazy with the tariff talk and everything else going on. Plus, we continue to print money and everything. So that's kind of the whole deal there. Look and see if we got any chat. So yeah, same thing. I don't know if I mentioned stay away from silver, but same as gold, right? Watch for that pullback. See the exhaustion in this thing. Watch for that extension, and then you can see it. Even today, it was at 106 for a high, and it's pulled all the way back to 98, right? So watch this thing maybe drop down, do the breakout somewhere in this 85, 86 range. That's a time to look at it. You want to see it pull back, get this energy charged back up, and then it's off to the races again. I don't think silver or gold are done by any means. We're moving into a new paradigm. We're moving into a new shift of really, uh, kind of the order of finance in the world, like a Bretton Woods type thing, 1971 type thing. We're moving now that like gold is a tier one asset. I like gold the most because it's a tier one asset. Silver is not a tier one asset, but silver is used in a lot of production and things like that. Um, but tier one asset means that you are on the same level as like the dollar or like US treasuries and that sort of thing. So gold is now a substitute for these things in the marketplace. And that's one of the reasons you see gold going as crazy as it is it's not you and me buying this, although I mean we are. It's the big institutions are buying this as an alternative to like US dollars, treasuries, and things like that. And at some point, that is going to come home. At some point, that is going to make a big difference, right? When the buyers ultimately run out or we don't have enough buyers, we have to continue buying our own debt. So you have to watch the tail and you have to watch the bond auctions for how that plays out over time. At some point, that will come to a head. So we'll have to see, unless there is a shift to get people, really investing back into and buying those dollars. I just don't. That's not the trend. I don't see that happening across the world with just where things are going and stuff. They now have an alternative, and you think about it. You can store a little bit of gold, right? And it's worth a ton of cash. You know what I mean? So one gold bar is worth, just tens of thousands of dollars, right? So you don't have to store cash. You don't have to have anything in vaults. You have a pallet of gold, and that's enough. That can be hundreds of millions of dollars, right? So that is a nice thing about gold in that way, and you can exchange it for when you need dollars or whatever you want, right? So that is it's a new reality of that being an alternative now. Silver is following suit as part of it because the historical ratio to gold and silver is way off. I think gold silver would have to be like $1,000 to be even in that range at this point. So that's why silver is going to continue, I think, to do well. Precious metals will do well. Watch for commodities in the coming months. I wouldn't be surprised to see oil get going again, and some of that stuff. Definitely. Uh, Copper's going. You can see like copper's happening. Natural gas is going off the charts right now. And so you have to just kind of watch. I think this will be a year for commodities too. So cash is you got to keep your money flowing and working. If you're not, you're going to be a world of hurt. So that money has to continually work for you. That's like me. Perfect example is like for me, I switched at the beginning of this year. I've got a strategy called the 50-50 strategy. And what it is, it's a short term strategy designed to basically be in and out of a trade every few days. And it's designed to pick up a minimum 2% return on risk every couple days. But I've been averaging more like 4 to 6% return on risk every couple days. And I do it just about every day. Weeks like this week, I kind of lay back, because I want to see where the market is going to go. Like as I talked about, by the end of this week, we're going to have a pretty good direction out of here, right? So weeks like this week, I kind of just, risk event weeks. By the end of the week, I start trading again. I let kind of the week do its thing and show its hand. But a strategy like that, where you're in and out, in and out, in and out, and you keep that money and that velocity of your money turning over for you, is working really, really well. That's all I'm really doing right now, because I'm just putting that money to work and just stacking it. My students, that you guys are with me have been seeing that. I actually had several more close out today on today's move. And so, those are strategies that, work well. And you got to think about it until we get, that change in market character, until we change and get out of change to like a market character like this, then other strategies make more sense. But right now, that strategy is doing really well. And, it's not a greedy strategy. It's just that consistent, like I said, 4-6%, 4-6%, 4-6% without a ton of risk. And it's designed to handle, a 2 to 3% move in a very short period of time, and that sort of thing. So, anyways, that's kind of the overall on metals with cash and everything too. So, good questions. Any others out there before I jump for the day here? Good? No? Okay. All right. Well, that's the big thing this week, guys. Be on the lookout for um, the earnings side of things. I think earnings will be pretty good, actually. So I don't think there's an issue there. The Fed's going to stay put. Powell's not going to do anything with rates with the whole dust up that's been going on there. He's just maybe even spiteful at this point. So that nothing's going to happen there. And then towards the end of the week, we'll see if any other fireworks happen. With this Canada thing. Right as of now, that seems to have subsided, and it looks like the government's not going to get shut down. So all bodes well for positive for the market. So, like I said, that's why I lean towards markets really breaking out from here and finally taking that 7,000 level. I think it's either that or a breakdown. The energy is there across the board to do it. So, thanks guys for taking a few minutes with me. Doc will be back next week. He'll be all set and everything, but I appreciate you guys tuning in. So as always, send comments, send them support at 12-minute trading. We'll answer them for you. And check out our programs right now, guys. If you haven't looked at like our courses and the things that are out there, there's some great, it's a great time to be learning this stuff and putting it into effect. So, 97 bucks is a course. It's super cheap, and you get all the revisions to it ongoing forever. I'd actually recommend checking out the campaign cash flow one. That one, Doc has really been lighting up. He's getting ready to light up again. And that's a great, daily income strategy. So, all right, guys, thanks for tuning in, and we'll see you next week.